Okay, hello everyone. Hello, and welcome to another episode of my company health check series. But before I start, I just like to declare that I just recovered from a flu and a cough, which lasted around 1 week. So, pardon me when I cough or have some speech pauses along the way. All right. Anyway, here I would like to share my occasional updates of my portfolio companies that I invested in and is still holding. Okay, I will analyze that using the bottom-up approach, usually by looking at the quarterly report all the way to the full year and beyond. So I believe that by journaling my research in video format, I hope that I can make myself more informed of my past decisions, whether right or wrong, and hopefully share my insights with everyone here so that all of us can benefit in some way, especially to my fellow active value investors. Okay, then let's take a look at Apple's current quarter 3 2023 results, okay, and what we can get from this earnings release. So, okay, I've tabled the segmented sales, segmented revenues for Apple this current quarter, and let's see what we can get out of this. Okay, so from what I see, it is interesting to note that for the current quarter, sales in the US have declined at a slower pace compared to the last quarter, where in quarter 3 2023, the overall revenues declined by 1.47%. Okay, while the previous quarter 2 2023, it declined at a greater pace of 2.57%. All right. So what led to this is that I believe that the China and the Europe markets have seemed to have improved and showed growth this quarter instead. However, if you look at the 9 months ended 2023, it shows a rather different result. Okay, so in 2023 9 months, most parts of the world sales have declined compared to last year, and this resulted in a net revenue decline of 3%. So my conservative estimate is that this year overall revenues will be soft and should decline by at least 5%. And this is consistent with my previous video about Apple that I've done. Okay, you can look back at the episode 1 for Apple. Okay, and if you look at the segmented results by product sales, okay, the current quarter of 2023, most of its segments are in decline except for wearables and Apple services. So we can see that the Mac and iPads have declined because of factory shutdowns last year, and this made a timing difference. In my last episode, I mentioned that Apple services is promising, and as predicted, okay, the continued growth this quarter to 6% from 5% has indeed demonstrated its potential due to the strong increase in subscriptions and paid services. Growth in the number of customer installed base continues to hit record highs, making services a very promising area for business growth in Apple. However, iPhone sales have declined, particularly in the US, due to weaker overall smartphone sales from weaker than expected consumer demands for such products. For the 9 months ended in 2023, most product segments are also in decline, but only Apple services is seeing growth traction. Okay, now we do a comparison in Microsoft and measure its relative performance to Apple. But because of different companies' reporting styles and the consolidation methods, okay, we can only use this sort of analysis as a guidance at best. Okay, so now let's take a look. If you look at the personal computing or hardware business in Microsoft this quarter, the decline is consistent with Apple's decline, where Microsoft declined about 4%, while Apple, with the same comparison, would have declined only 3%. But also do note that the personal computing business in Microsoft only contributes to 25% to their overall revenues. It is a significant part of their business in Microsoft, but if you compare to Apple, Apple has around 80% of the business in the hardware. Okay, so uh, with such comparisons, we know that of course Apple's risk on this is higher due to their nature of business in the hardware, in the IoT and hardware, or hardware which is handphones, wearables business. While Microsoft, this hardware business only contributes 25%. But of course, if we were to take a look at it, both the hardware business have declined, which is consistent to what Apple is currently facing. Okay, is that the things to do in the hardware business have actually declined. Excuse me. Okay, now we take a look at management outlook. So CEO Tim Cook and CFO Luca is cautious of the economic headwind heading towards Christmas, but they are confident that both the iPhone and Apple services will accelerate in growth by the end of this year. This is fueled by China and India, where switches seem to be gaining traction. So, what are switches? Switches are actually people who are not using Apple, okay, and then they currently realize that more and more of their friends, or maybe advertisements, or certain things that happen in their work requirements require them to switch from an Android to an Apple phone, to an Apple ecosystem. So we are seeing this more in China and India, which management has mentioned that the potential is huge because in China and in India, Apple's share is still rather small. Okay, it's fragmented. So CEO Tim Cook did acknowledge that there's a huge potential in these two countries, but it's good improvement because um, based on the statistics, we can see that uh, there is actually growth in China and in India. All right, but to take note that the forex market, okay, continues to be very volatile, and CFO has actually estimated that the overall revenue growth due to the FX to be around negative 2% for full year 2023. But CEO Tim Cook is confident that changes in the pipeline, such as Apple's focus to continue investing in exclusive content to engage the existing continued customer install base, will in turn create higher paid subscriptions, and better opportunities for Apple's services ecosystem. So there is also mention about continued upgrades and investing in meaningful AI projects across the many areas of Apple product lines, such as the personal voice feature, okay, that will create synthetic voices by in machine learning, and improvements in the fall and risk detection that will catapult Apple services growth further in the future. So Tim Cook has also mentioned that there seems to be very good traction in the Apple's latest high yield deposit services for Apple credit card holders only at this moment, and also its Vision Pro, which is expected to ship by next year. So currently, Vision Pro is shipped to only the developers to add apps into the Vision Pro's platform, and then hopefully by next year they're able to start selling to consumers. And but sales, they did not actually mention any guidelines because it's uncertain. All right, but Tim Cook believes it's very promising at this point of time. So for the higher deposit program, the current program is in partnership with Goldman Sachs, but news currently has it that Apple is currently in talks with American Express instead, and Apple will end the existing partnership with Goldman. So American Express is also another portfolio company I own. And for more details about American Express latest results, you can watch my previous company health check series episodes. Okay, now for the P&L. Let's take a look at Apple's P&L dating back to as far as 2005. Apple has shown resilience in terms of revenue and net profit growth from 2005 to 2022. Apple has performed well during the 2009 mortgage crisis and the COVID, creating healthy returns to investors in both crises. However, net profit margins have seemed to come off from 2022 to 2023, from a 31% high to a current 26% based on Q3 2023 results. However, at net profit margins of 26%, Apple still holds a strong earning power. Near-term slight decline in sales is inevitable, of course, but because my holding period tends to be 5 years or more, I identify Apple's potential in the long run and whether their current visions and investments will pay off and unlock further value to us value investors. Okay, we look at Apple expenses. I noted that cost of sales have improved, comparing both the current quarters and 9 months ended 2023 to 9 months ended 2022. But if you zoom in at operating costs have increased in the current quarter due to an increase in R&D expenses. But CFO Luca has mentioned that he is committed to carefully focus on cost control measures and have been implementing freeze hiring and reduction in R&D expenses as well because of their dampened outlook in the near term. Okay, if you look at the balance sheet, based on our analysis, Apple's debt position have reduced this quarter as Apple is committed to make use of its stronger cash position to both reduce debt and buy back more shares. I studied the net ROA for a clearer picture of how the company deploys its net assets, and I set a basic hurdle rate for growth companies like Apple. So it depends on the business I invest in for what to look at in the ROA. Okay, so its latest net ROA sits around 34% and is better than the industry's gross ROA only at 10%, giving Apple a huge winning margin across the board. Okay, for the cash flow, free cash flow as at third quarter 2023 is at $1.61 per share. But this is significantly lower than the previous quarter, which is at $4 per share. Why? Because this is due to the higher capital expenditure spent this current quarter, and also there is a lower cash generated from operating activities this quarter. So at $1.61 per share for free cash flow, this is roughly 89 times its current share price versus the industry of only 39 times. So let's look at other valuation metrics to determine the value of Apple's intrinsic value business. So if we look at other matrices for valuation, Apple's current forward price earning is at 28 times. Apple's median price earnings, historical median price earnings is 25 times, while the industry's price earnings is at 28 times. This shows that Apple's current multiples valuation is close to the industry's future expectation at current prices. But based on my PE forward valuation metric, Apple's share price to me should be around $152 to $162 at current prices today. Okay, and better than my previously forecast valuations, as earnings turn out better than my previous forecast. However, this range is not subject to any surprise earnings going forward to the end of the year. And my very conservative expected returns from a discounted earnings perspective, Apple's valuation to me should be worth around $889 billion, or just about 3 times its 2023 forward revenues. The improvements in my discount cash flow valuation indicates that better than expected earnings it indicates better than expected earnings as compared to my previous estimates. Current price to revenue is around 5.5 times 2022 revenues. So from here you can already see that the current prices attached to Google is a little bit higher compared to my intrinsic valuation. Okay, but of course, this means that if I purchase Apple at a very attractive price range, the margins of safety are still within my range, and I should not be too worried about any movements in the daily market prices, which is tends to be very volatile for Apple. So, in conclusion, Apple's fourth quarter earnings should not have any upside surprises and should be already aligned with what management has indicated during their latest result announcement. But I'm looking forward to see whether management goals set can be met in their next quarter's earnings. I think that Apple at current valuations is already overbig, like I said in the earlier slide. Therefore, you can see that there's already a sharp decline from the previous high. But anyway, let's see if Apple can continue to win over investors and customers alike during the next Christmas season up until early next year. Let's for the win. All right. And good luck to you guys, and hope everybody makes money from any market corrections going forward. All right. Till then, we'll see you again. Bye bye.